All right, so I'm making this video to go over some Forex basics. So let's start with what is a pip. So a pip is the measurement in the market. Pip stands for point in percentage. So let me show you. So for example, let's say, well, let's start with this. I'm in this trade right now, very small risk because someday shouldn't even be trading right now, but just taking a small risk per trade. So as you can see here, in this number right here, it says 33.6. The blue indicates my profits. So right now I'm in small profits in my blue. The more in blue, I'll be in higher profits. Once I'll explain what a take profit is. So this is 33 pips, this blue section here. I use my ruler to show you. All right, so 33 pips. You can see it right there in the white, in the box I've used right here, 33 pips. Right, so that's my reward, and this is my risk. So about 18 pips I'm looking to risk. So pips is very simple. It's just like how we measure using a ruler. 12 inches is bigger than 5 inches, right? Just an example. This will give you more profits than this, correct? All right, so let's move on. That's a pip. What is a stop loss? So right here, like I was showing you, the red indicates, let me hide this real quick. It's confusing. All right, so the red indicates my stop loss. So this red number here is 102.875. That is my stop loss. All right. Okay, so that's my stop loss. If price, say for example, price is right here at the moment. If price went down here under my stop loss, I would be taken out. First, let's indicate what this is. This is a buy. This is a buy situation. All right. So we're looking for price to go up to our take profit level. Once price goes above our take profit level or touches our take profit level, it will automatically take us out the trade in profits. All right, so all these would be given. The take profit and the stop loss would be given. So that's what a stop loss is and the take profit is. So we're looking basically for the price right here, which is right here, to go all the way to our take profit. This is a very small trade. If it was like Tuesday, Wednesday, I'll be looking for a far bigger take profit. So we always risk small. So like for example, if it was Wednesday or something like that, more in our trading plan, always stick to your trading plan. Key, I'll go over that in the next video. So in this kind of situation, you see how big our profit section is compared to our stop loss, our risk. Our reward is far bigger to our risk. And even right here, it says 4.67 is our risk to reward ratio. So TradingView is very helpful to me. I use it a lot. All right, so that's a stop loss, that's a take profit. Now let's go over what is a buy limit and a sell limit. Let's go right here. Let's go to another chart. All right. So for example, let's say I send this trade. All right. Price is not where I'm looking for it to go. Sorry, let me rephrase that. At the moment, price isn't where I'm looking to sell it. So let's indicate first what type of trade this is. Say sell situation. And in this case, it's a sell limit. All right. So regular trade, for example, let's say I'm looking at price right now. I'll say to sell it right now. Right. So price is at our entry, we're looking to sell it here. But in this situation, let's say it's not let's say price is not exactly where I'm looking to sell it at the moment. So let's say I send a trade. So, you put this in your phone, a sell limit. All right. So once price comes, let me make this smaller. All right. So price is here at the moment. You see my dashed line right here. So let's say price is here. I'm looking to sell it here though at 24892. So basically, when price comes up here, that's when the trade would activate in your account, in your trading account, MT4 account. And that's where, we'll see some more movement, something like this maybe. And we looking to hit our take profit because we're indicating a sell. So price could do something like that. So that's a sell limit situation. Let's do a buy limit. All right, so take a picture of that. Rewind this if you have to. Get rid of this. All right. So in a regular buy situation, maybe I'm saying to buy it now. Price is where I'm looking. I analyze this chart. I'm indicating a buy right now. But sometimes we're not, doing this exactly at the moment because price isn't exactly where we want it. So let's go over the buy limit example. Okay. So basically, in the other situation, we were waiting for price to go up to sell off. In this situation, we're waiting for it to go down to buy up, to buy off. Same thing, right? So we're looking for it to hit take profit. Say price just shoots up all the way up, right? Let's just say example, right? So that's a buy limit. We're basically waiting for price to come to us. So we're waiting for price to come down this much amount so we could get in. Sometimes you can't rush the market. Let the market come to you, like in these situations. Right? So that's the buy limit. Now let's go over the lot size. So like I always say, your lot size should match your account size. You don't want to be using a big lot size and your account size is very small. So I would say your account size should match your lot size. Don't over leverage. I'll go over in the next video about the risk management spreadsheet, but I'll just briefly go over lot sizes. So let's say 0.01 is the smallest, 0.10, and a 1.0. So this is a micro, and micro is 0.01. Standard lot is a 1.0, right? So let's say long position, we're looking for a buy. Let's just say we're looking for let's say 150 pips. Let's say that's 150. So it says 1,525. Move the decimal to the left side once. It's 152 pips. on other pairs. Let's do it here, actually, matter of fact. Let's do it here. All right. So lot sizes. So I taught you what a pip is, right? So in this case, 33 pips while risking 18. So R to R is about 2. 2 you're risking. Your reward is 2 while risking 1. Right? So we know take profit is 35 pips, rounded off. All right. So this is how you calculate lot sizes. So a 0.01 is the smallest lot size. So 0.01 on 35 pips is $3.5. You know, let's say you have a $100 account. Your first trade you take on a 0.01, you're up $3.5 in the first trade. And that seems a lot, but you know, you're taking 5, 6, 7 trades with high reward to risk. It'll add up at the end, especially when you have an accurate, you know, educators like we do in S&P. So let's move to 0.1, 0.10 lot size. To calculate that, you just move the decimal to the left side once, to the right side once, sorry. So to calculate 0.10 lot size on 35 pips, you move the decimal to the right side once. So you take 1.0 times 35 pips. So that's $35. So on a standard lot, you do the same thing, move the decimal of the lot size to the right side once. So let's see, let's do this. So basically this is 1.0 times 35 pips. Same goes for here, which is 0.1 after you move the decimal times 35 pips. Same thing goes for here. You move the decimal once and you multiply by 35 pips. That's $350, which is 10 times 35 pips. Right? So that's how to calculate lot sizes. You know, sometimes you might be using different lot sizes like 0.04 or like 0.57, 0.53, you know, 1.20. It all depends what your risk management spreadsheet gives you. You want to follow that at all times. Always stick to your trading plan or else you're gambling. All right, so let's quickly go over spread. I'm not going to get too much into it. If you go to your MT4 right now, open up your app. Give you a second to do that. All right. If you go to the quotes page, every pair that you're looking at has a spread. So for example, it's 827 where I'm at in New York right now. EUR USD. Let's give an example. Sorry, let's use USD JPY, the example we're looking at. So let's also calculate first before I do the spread. Let's calculate what we would lose. This is if TP slapped, right? So let's check if TP didn't get slapped. Let's see if stop loss got slapped. Stop loss slapped. 0.01. So the take profit is 35. Stop loss is 18. That's rounded to 20 pips. All right, so 0.01, 0.10, 1.0. So risking 20 pips on a 0.01, you know, move the decimal to the left side once, to the right side once, sorry. Okay, so a 0.01 while risking 20 pips. Let's say stop loss got hit. We lost the trade. Let's say we lost the trade. So the stop loss is 20 pips. You move the decimal to the right ones. You lost $2. On a 0.10, you lost $20. On a 1.0, you lost $200. So like I said, we usually take bigger R to Rs, like 4 to 1, 3 to 1, 5 to 1, 6 to 1, 7 to 1. This is just a small trade I just looked at real quick, 2 to 1. So that's the lot sizes. So you can see here, let's say you're on a 0.10. You're looking to gain $35 while risking $20. You know, so I'm taking that trade. I can look for a bigger win, but I stick to my trading plan. All I want is 30 pips a trade. Some people look for different amounts, but doing that, I'll be allowed to hit my goal with ease, even if I take small losses here and there. All right, so let's go over spread now. So the pair is USD JPY. We're looking at USD JPY. Let's go under MT4. I use live spread, for example. So you go to the pair on the quotes page. Right under the pair, it should say spread. And right now, it's 13. It says 13. So every pair has a spread. Anytime you enter a trade, your spread is deducted from your entry. So 13 means 1.3 pips. Pretty self-explanatory. Move the decimal to the left side once. You can read how much pips the spread is. So, for example, let's say the current price is 103.115 and you wanted to enter the market on a buy to buy it up. Just for an example, that would not be a good entry, but just for an example, the price is right now, let's jot this down. Price 103.114. Okay. So the spread is 1.3. Let's say you're going for a buy. All right. The entry you would get is 1.3 pips lower. Sorry, higher. About there. Just for example, about there. 103.129 in the light blue number on the right side. So, let's say you entered a sell. Let's say you wanted to sell the market. It would enter you a little lower, 1.3 lower. So it all depends on the broker you have. So 1.3 pips spread for this pair, USD JPY, might be different on another broker. So some people are using different brokers. I would recommend a broker. I won't tell anyone to use a broker, but it's LQDFX. Let me know. It's definitely the best broker in my eyes. Has very low spreads on currencies when trading currencies, right? So I mainly trade currencies. I trade gold too. It's very good for those pairs. It's very low spreads. So for example, on LQDFX, that's my broker. Let's say on another broker, the spread can be something like 56, and that's 5.6 pips. Let's say on KOT4 or Yugos or something like that. Right. So looking at that, if knowing what spread is, say I'm going for a buy, I'm gonna get a entry 5.6 pips higher rather than 1.3, that's like self-explanatory. I'm going with low spreads. So having low spreads on pairs, definitely key. It's gonna help you, get better entries, save, potential profits, So a broker, starting with a good broker is definitely important. It helps with the spread. So I went over all the topics here. So I'm gonna send out a new video, and it's gonna be based on our trading plan. Right. So we trade institutional trading. We don't trade no retail trading. So we have a lot of, our plan is basically completely different than a retail trader's plan would be. So stick to this, you know, definitely be successful in trading. Whether you're still learning or are experienced, sticking to your trading plan is a must. So that will take you from being iffy trader, sticking to risk management is a must. Over leveraging is a never. Always risk manage. So I'm gonna release that video soon too. All right, so I'll end it here, and thank you for listening.